Hello, fellow passive income investors. Welcome to today's update. Today's update is going to be on the income guidance on LFGY or LFG. This is an ETF from yieldmaxetf, came out not too long ago. So I'm going to do two ways. The first way is going to be for people who want to invest their money today and let their money grow for a long time. And for other group is for people who are investing their money today and they want to use the distribution they're getting to on a daily basis. So both way will be great, and both way I'm going to show you how you can make a lot of money. And the other group, just $10,000 will be enough amount of money to retire. So the first thing we're going to look at the price, Yieldmax crypto industry and tech portfolio option income ETF, which is LFGY. The price today is $49.68. Remember, this ETF came out around $50. So it hasn't, it's pretty much almost flat, right? After hours, it seems to be kind of, going up or down 1%. But this is a fluctuation of today. You see, very volatile because it has that crypto into it. And also, it has technology. And, technology, there are a lot of AI including that. And recently, all the semiconductor ETFs and stocks have been doing crazy. So this is the chart we can see, but this is very good because when you see this volatility, it seems to be that they're going to make money in terms of those call options. But if we stretch all the way to max, of course it doesn't have max, hasn't been out for that long, but if we do 5 days, you can see how volatile this ETF is. Not compared to other ETFs, but in relative term is not as volatile though. So now if we look at 52-week range, which is only a few days that's been out, is between 47.20 to 55. So when it came out the first couple of days, it went up crazy all the way to 55. And now we retraced back to where it is right now at 49.68. Nevertheless, this ETF seem to be going great so far. Volume, it's a lot of volume, guys. Has about 133. So for an ETF like this, it's a pretty significant. And expense ratio right here, it says 0.99. I'm going to show you the whole expense ratio on the actual Yieldmax website. If we go to Yieldmax website here, the first thing we're going to look at distribution rate right now is 1991. This hasn't been updated, right? So it's not this. I'm going to show you the actual distribution rate, LFG. And if you are an investor who don't know what this is, I made a video a couple of days ago. I'm going to put the link below so you can know more about this ETF. But the first distribution they paid was 74 cents. This was the first one which is they paid on January 24, 2025. But also they had just announced another one, and which they're going to pay is going to be on Friday, and that I believe is about 63 cents. So it's a little bit less than this one, but nevertheless it's a higher yield again. Now, if we look at the fund overview, for people who don't know this ETF, LFG is an actively managed ETF that seeks current income and capital appreciation via direct investment in selected portfolio of 15 to 30 crypto companies. So again, this is direct investment. It's not any like other Yieldmax ETFs where are more synthetic. So this is a pretty good, is direct, but because they invest in the crypto and tech companies, that's why you saw the volatility that it has. So LFG seeks to generate income primarily by writing, selling the option contract on some or all of its portfolio in crypto companies. LFG aims to distribute such income on a weekly basis. So this will join other Yieldmax ETFs or fund of fund like ymax and ymag to pay distribution weekly, which is going to be great. And that weekly distribution is what we're going to talk about today, because that is going to generate you a lot of money. Remember, when you compound weekly versus monthly, there's a huge difference. Now, if we go down to objective of this fund, LFG primarily investment objective is to see current income as any other ETF. And of course, the secondary investment objective is to seek the appreciation from those stocks they're going to invest or underlying stocks. So the expense ratio is not that bad. It's 0.99 as I showed you, and it was incepted on January 13, 2025. It traded on New York Stock Exchange. NAV right now, net asset has about 40 million, so it's growing. Remember, first time when I made a video, it was only 20 million. Now it has about 40 million. So a lot of people have have come in and just bought a bunch of shares. NAV is 48.79. Remember, this NAV is not usually updated the day after, so it's about the same. NAV is pretty much the same as a price, which is 49. If we go down all the way to performance, there isn't a performance because this ETF just came out, so there is no much information there. If we go down to holdings, this is very important because you want to know what this ETF is investing in, right? So remember, invest directly. Now they're going to invest directly in stocks and ETFs as well. So we can see here, for example, they invest in Coinbase, which is the biggest chunk, is 16.30%. MicroStrategy is 15.78. They have iShare, Bitcoin Trust. Remember, this is an ETF. So it's pretty good diversified because this ETF here invests in cryptos. So instead of having all their allocation into individual stock they put on crypto, it's not big. It's about 10%. Mara Holdings, Mara stock hasn't been doing well, and that of course has a huge drag because Mara today, for example, I think it went down, I believe so. But anyways, it's only 8%. Clean Spark Inc. is about 852. Riot's Platforms is about 596. Huts and Corp is 5%. Core Scientific is 5%. Cash and Other is 3%. NU Holdings Limited, Cayman Island, that's 3.68%. But you can see the huge chunk of this ETF has invested in these three here, or these four. I mean, the first one is Coinbase. Of course, you all know Coinbase. And of course, if you want to invest in Coinbase, ETF that generate a lot of monthly income, there's an ETF from Yieldmax, which is called Cony, and I made a lot of video about that ETF. So if you check my link below, you also see what Cony is. And MicroStrategy, MSTY, there is also an ETF from Yieldmax, which is literally focused on MicroStrategy ETF or stock itself. So all these, they're pretty much they stock themselves, and also they have ETFs from Yieldmax individually that tracks this one. And these two ETF, Cony and MicroStrategy, they pay huge dividends. So that's a pretty cool. Now I'm going to take you to calculation and see the magic of compounding. First, we're going to look in average since inception. Remember, they only pay 2 times, but within those 2 times, we can actually do average. And average right now is 69 because the first time they pay 75 cents. The second time they pay 63 cents. So we can average about 69 cents. And that all together gives you about $1.38. So if you take the amount that they've paid so far, you add that to the price of today, which is 49.68 I showed you, that's going to be a 51.06. Do you remember when you do your base calculation in terms of how much your stock actually worth? That's how you do. You take how much you've purchased that stock versus all the distribution you're getting, and you getting that share price. That's your actual price. So if you bought at 49, then you minus this one is going to give you the amount that you are up or down in that case if you're down. Now, if we look at the average distribution using that price of today, and then the average distribution they paid so far, that's going to give us 72%. What I did here is that, of course, I take 69 cents, that's per share per week. That is times 52 because you're going to get this 152, provide this is not going down, right? More. Or if it goes up, I just did average. So it might go up or it might go down, but average is going to give us a 72% yield. That's a huge. Now, with that yield, let's look at how much you can generate using amount of money you might have. Income projection for 2025. If you invested $25,000, you're getting 503 shares, and that was weekly income of 347. That times 52, which is a year, is going to give you 18,056. If you invested $50,000, you're going to get 694. So it's pretty much double from that, right? And that's going to give you 36. If you invested about 150 with the price of today and the yield of today, is going to give you weekly income of 2,083, and that's annual income of 100,000. So I would say 100,000. It's a money that you can start kind of retire today. It depends where you live. $54,000, for example, can be a lot of money for some people, right? Especially if you are also receiving other type of income from other sources, and that 54 will be enough. And 75,000, actually, it's really not that much money. For a lot of people. A lot of people have a lot of money in their portfolio. So 100,000 for someone who's younger. I wouldn't say they will put all their money in an ETF like this, to just buy one ETF, because you don't need the money. But if you want to grow that money, also I'm going to show you, if you're a younger person who want to buy this ETF. But if for someone who need the money, this is how much you can put to generate this amount, right? So on average here, I would say 150. That's going to give you 108. That's enough income. Even if you pay tax of, let's say, 30%, you still have 70 grand left, and that's going to be enough income for most people. So if we go all the way down to, let's say, 500,000, that's going to give you a lot of money, crazy amount of money, 361. But safer to say 100,000, it's a good enough for now, right? Now, you're an investor who you don't want to have this annual income. Yes, of course, you do want this annual income, but you're not doing this calculation. You're not thinking about this type of calculation. Your calculation is for 10 years from now. I have another calculation I can show you. So in this calculator, here is a magic things that's happening. So now you invested a $10,000. We are doing, you see here, I put 60%, because what I thought about, I can put 72%, is going to give us a lot of money. But now we say, well, the yield might come down. So what if we put 60% only? I didn't put 72, 60%. And I did 60% with more different type of math. I came up with a 60%, but it can go down to 30%. It can go to 50%. But we are assuming on average here, guys. And remember, compounding is weekly. The annual yield is 60%, but you are compounding your money weekly, because every time you're receiving those distribution I showed you, right, whatever amount you're paying, for example, $10,000, you're going to get, let's say, for example, $200, you're going to invest that, and you're going to generate another income. It keeps going that way. So if you invested for 120, which is about 10 years, your portfolio is going to turn into 3,809,8057. So over almost 4 million, just within 10 years, using that calculation. But we know this yield is going to stay the same at 60%, 72%, 30%. We don't know about that. And also, I count this math provided the price that we have right now, which is 49.68. Price stays the same. It doesn't go up. For example, if this price goes up, then everything changes, because your yield, of course, is coming down for all the shares that you're buying. Your price will, you're gonna buy at a lower yield because your price went up. But also, if this price goes down, you're buying at higher yield. So this math is assuming the price stays the same, the dividend stayed the same at 69 on average of that. So guys, this is how you can actually invest $10,000 to $100,000 and generate a lot of money for people who want to receive the money today. And or you can invest only $10,000 and let it sit for a long time, but you have to reinvest all the distribution, and you can generate over $1 million portfolio. So if you like this content, make sure you smash the like button. And if you haven't subscribed, in order to you to receive this type of updates and more of these type of videos, make sure you subscribe and share with someone who thinks this video might help them also to generate this amount of income. And don't forget to leave a lot of comment below, because I want to know, what do you think about this calculation, and what do you think about this ETF? Are you an investor, you like LFGY, or you like ymax, or you like ymag, or you like those round hill ETF like qdte and xdte and rdte? Let me know in the comment below. Thank you very much. See you later in the next video. Bye bye.